Hello, it's ChewDog Charts. Today's video is a result of a request by a subscriber, snowfirel, which is a very appropriate name with respect to what I try to teach, and that is that the stock market and individual stocks move in cycles. So snow and fire are opposites, but they are opposites of the same cycle. Let me read something to you from Susie Kasem. Everything turns in cycles and spirals with the cosmic heart until infinity. Everything has a vibration that spirals inward or outward, and everything turns together in the same direction at the same time. This vibration keeps going. It becomes born and expands or closes and destructs, only to repeat the cycle again in opposite current. Like a lotus, it opens or closes, dies, and is born again. Such is also the story of the sun and the moon, of me and you. Nothing truly dies. All energy simply transforms. So let's take a look. 2017 was a dismal year for AT&T investors, who watched their stock drop 14% as the S&P 500 rallied 17%. The stock was weighed down by 4 straight quarters of year-over-year revenue declines and ongoing business losses in video subscribers. Analysts expect AT&T to finish fiscal 2017 with a 2% sales decline and 3% earnings growth. For 2018, both figures are expected to stay roughly flat. That doesn't make AT&T look like an exciting investment for the foreseeable future, but investors shouldn't overlook the 4 big moves AT&T is trying to make in 2018. So let's take a look at each of those moves in more detail. AT&T is already America's second largest wireless carrier, top wireline service provider, and biggest pay TV provider, thanks to its purchase of DirecTV in 2015. If it closes its planned $85 billion takeover of Time Warner, it will also become one of the biggest media companies in the world. The merger would introduce major bundling opportunities between its wireline, wireless, video streaming, and pay TV businesses. These bundles could help AT&T counter cord cutters at its pay TV business, widen its moat against Netflix, and lock in more wireless customers. AT&T claims that the acquisition would become accretive to its adjusted earnings and free cash flow within the first year. However, the U.S. Department of Justice recently sued to block the merger on the grounds that it would create an anti-competitive ecosystem which would limit customer choices and hurt streaming video providers. AT&T's top priority for 2018 will be to clear these regulatory hurdles and seal the deal. AT&T will also invest heavily in new towers to expand its pre-5G and 5G network capabilities. Earlier this year, Barclays estimated that AT&T would deploy equipment on up to 50,000 towers and build about 2,000 more towers to upgrade its infrastructure. AT&T also recently teamed up with Verizon in a joint partnership with Tillman Infrastructure to build hundreds of new towers. AT&T's acquisitions of spectrum licenses, DirecTV, and potentially Time Warner are causing its debt levels to skyrocket. Its long-term debt hit $154.7 billion last quarter, up from $113.7 billion. If the Time Warner deal closes, that figure could rise above $180 billion. AT&T has already been selling various non-core assets, including certain cell towers, wireline operations, and data centers to extinguish some debt. But AT&T will likely need to sell some more assets to further reduce that debt figure. 2 possible divestments include its digital life home security business, which could net $1 billion in a sale, and its Latin American pay TV assets, which could be sold for $8 billion. It might also consider selling CNN to gain regulatory approval for the Time Warner deal. AT&T added 3 million wireless subscriptions last quarter. However, a growing number of those new subscriptions aren't for smartphones. They're used to link tablets, wearables, drones, and connected cars to the internet with standalone connections. AT&T stated that it connected almost 100,000 vehicles last quarter and that the auto market represents a real opportunity as infotainment and navigation devices rely more heavily on constant connections. AT&T's growth across these markets could diversify its business away from the saturated smartphone market. And as you can see from this chart here, AT&T stock remains relatively cheap at about 13 times the forward earnings. Additionally, AT&T pays a relatively hefty dividend of over 5%. Therefore, investors looking for a cheap income play in AT&T could consider buying it. However, don't expect a big rebound over the next few quarters. So now let's look at the price chart in more detail. And the chart we're looking at here is the 20-year monthly chart on AT&T, and the symbol is T. Now, considering a purchase price of $40 per share, we're currently at $37.21, so a slight loss. Now, I've taken the opportunity to point out some double tops here, and this chart dovetails very well into the introduction to the video, where stocks in the stock market moves through cycles and often repeats. And if it doesn't repeat, it certainly rhymes. So we have a double top here, a double top here, a double top here, and a double top here. And I've just drawn this trend line here on the upper end arbitrarily, and down here showing the bottoms or each low heading up, so higher lows. A very good formation for the last several years. Now, as I said in the earlier segment, that I don't expect any significant moves for, say, the next few quarters. And here is why. Do you see, looking at this chart, any other pattern? Well, I do. Starting here, we have an up. We have a downward move, and then we have a consolidation. Up, down, consolidation. Up, down, consolidation, up, down, and we're just about to move into the consolidation phase. So that's why I'm thinking that this stock is probably going to move sideways for the next, say, few quarters, perhaps even a little bit longer. But while you're sitting there and waiting for the stock to improve, which I think it will, collecting 5% on a dividend is a good place to be. Now, I cannot recommend this for you to buy because that's not my job. That is your job. Each investor has to conduct further fundamental analysis, but AT&T looks like a relatively strong candidate for consideration. So for today, that's ChewDog Charts. Thank you.